Hello guys, you're welcome back to my YouTube channel. This is the continuation of the introduction, Forex trading made easy. This is candlesticks part 2. Now, we talked about candlesticks in the last course and you saw the movements, bullish candles, bearish candles, and how candles are formed. Now, there's something we call candlestick patterns, and there are major candlestick patterns, and these are just the major candlestick patterns that we are going to be discussing. Now, we have what we call the doji. The doji has several types of dojis, but a doji is a doji. And what are the characteristics of a doji? A doji has little or no body. Little or no body. Has a low, but the body is little or there is just nobody. Now a doji tends to tell some stories in the charts. A doji could mean buyers and sellers are not yet decided. Okay, so there are several types of dojis. You have the regular doji, you have the gravestone doji, which is this. You can see that the shape is like a gravestone. You have the dragonfly doji that looks like a T, and you have the long-legged doji that is like the regular doji, but this one is very long, like a cross. Okay, now we have an engulfing. So whenever you see the red, it is bearish, green is bullish. Usually, that is a rule of thumb. Okay, so a bullish engulfing, a previous candle, bearish candle is completely engulfed. And for it to be an engulfing candle, the bullish candle has to be at least twice the size of the bearish candle. And then on the other side, a bearish engulfing. So you see a bullish candle and then you have a bearish candle engulfing. These are usually used to spot trend reversals or trend continuations. Okay, but we will discuss this when we try to put it together. Okay, now we have the harami. Some of these does not happen often, but we're going to discuss more the hammer, the shooting star. So the hammer is always found at the bottom of a trend. Well, usually used to identify, you can see the shape is like a hammer, opened higher, has little or no upper body, upper shadow, but has a long shadow. Remember what we call these things, shadows or wicks, and then closed higher, having the shape of a hammer. Okay, so when you see this at the maybe a trend continuation or at the bottom of a trend, it depicts possible trend continuation or possible trend reversal. Now the hanging man looks so much like the hammer, but the hanging man, it is called the hanging man because it hangs at the top of a trend and it depicts possible trend, an uptrend reversal, or a reversal to the downside, whether for a total trend reversal or trend continuation. Okay, we have the morning star, which we are going to show some practical examples of this. The shooting star is like an inverted hammer, which is at the top of a trend and depicts possible trend reversal. So, and there are some applications for this. So you would see uh, this inverted hammer price is going in an uptrend and then you see an inverted hammer. This is a hammer. This is a hammer in a downtrend. So before we talk about trends and all of that, in the next course, we are going to discuss trend, bullish trend, bearish trends. Okay, so but in this course, I want you to know what candlesticks mean. You've seen the formation of candlesticks in the last course, and there are certain shapes that when you see in your chart, it depicts, it means something. So maybe We can take a quick look at the chart to see if we can find some of these candlestick patterns. Okay, so let's make this, or better still, let's get a fresh chart window. Okay, so you would see a doji here, little or no body. Okay, and then let's stop this auto scroll. Okay, let's look at a couple of them. You can find it when checking quite a number of you. So you can see this could serve as, well, not entirely a hammer, but it looks like a doji as well. Remember the definition of a doji: little or no upper body. Here is a hammer, little or no upper body as well, but has some body. Okay, a doji has little or no body at all. Okay, so this is like a dragonfly doji. Okay, and this is a hammer. So when you see these things, you notice that after this hammer formed, price tended to push upwards. But this does not mean that anytime you see any of these candlesticks, you should pick a buy or sell. So you can see this shooting star. Some people call it inverted hammer. You can see it at the top here. And when it occurred, it was warning that price is probably going down. So you don't just take that decision based on one. Or later in maybe two courses or three courses away, we will discuss how to buy and sell, what informs your decision. That is when we talk about Forex analysis and so on and so forth. But you don't just say, oh, this is a hammer, let me start buying, or this is a shooting star, let me start selling. It does not work like that. You need to have what we call a confluence of factors. So don't be in a hurry, sit tight, and in the next course, we are going to start the introduction to uh, well, we discuss trading platforms, and after trading platforms, we talk about Forex analysis. All right, thank you so much for sticking around. Check the description of this video. You will see a link that will take you to our Telegram channel. Make sure you join that channel to get free signals and to also be a part of the community to get up-to-date information about our services and market information. See you on the other side. See you next time. Bye for now.